Welcome back to Fast Market. I'm Alex Coffey alongside Kevin Hinks. Taking a look at the equity markets here. Slipping just a little bit. S&P is now up 5, giving back about half of the early gains. The Dow Jones continues to slide lower here, now down about 0.5%. But the mighty NASDAQ says no thank you as it continues to hold its gains up 0.6%. The Russell 2000 also safely in green territory, up about 3 points. Now time for our cash tag segment, however. Joining us here remotely and live is co-founder of LikeFolio.com, Landon Swan, and Jenny Horn, TD Ameritrade Network contributor, is with us as well. Jenny, I'll come to you first here to get things started. We're talking a very fun name in Chewy, one that I can say has certainly taken some money from myself, and I'm sure many of the viewers who are pet owners as well.
Yes, Alex, absolutely. And anecdotally, if you've ever seen me broadcasting from my home, you've seen that I have cats. They're often in the back of my shot, whether I want them to be or not. And Kevin Hinks loves to tease me about the cats. But for that reason, I am a very loyal Chewy user. And I do have to say that this company is relatively new. It only went public back in June of 2019, yet they boast about 20 million active subscribers now as of the last quarter. So they are growing at a very healthy pace. Now, the street is expecting revenue of just over $2 billion for this quarter, which would be 30% year-over-year growth. But they are still expecting losses per share of about 2 cents. So this company has not yet been able to turn a profit. Now, they saw a surge over the last year when we saw people wanting to stock up on pet supplies, of course, without leaving their homes. And also, we saw this trend where there was sort of this heightened interest in pets. I mean, we saw so many shelters actually being emptied with people wanting to buy pets since they were spending more time at home. Now, this is a sad trend to me because as people have started to leave their homes and go back to work, so many pets have gone back to these shelters, and there's sort of this heightened interest in having a pet. And that has not boded well for Chewy, of course. They're seeing labor market challenges seriously weighing on their bottom line, and they reported actually having very difficult time staffing some of their fulfillment centers, which has led to wage increases, which is sort of retail's tale right now across the board. But with Chewy right now, with the rise in cases, they've actually had to slow production at so many of their logistical centers, which has led to many items being out of stock, many things, being back ordered. And the issue is this market is extremely competitive. If you're not able to find what you're looking for on Chewy.com, you can go to Petco, PetSmart, Amazon. I mean, I just think right now the consumer can be so selective, and this could potentially hurt Chewy's sales this quarter. Another thing is that really Chewy has a pretty loyal consumer. They have this Autoship feature that is wonderful. I can't tell you how many times something has been sent to me that I didn't even realize was being sent. But I do think this sort of decelerating trend with owning pets right now does not fare well for their Autoship feature. But there was a really positive, actually, Wedbush report I read a few weeks back that said that what makes Chewy different this quarter than many of its e-commerce peers, which have seen pretty mixed reactions following their reports, is that they offer consumer staples to their consumers, meaning these reoccurring pet supplies, not discretionary goods. And as much as I would love to say that my cats are discretionary, unfortunately, they do have to be fed no matter what. And so that does bode well for Chewy. Plus, they're planning on expanding some of their pet healthcare offerings, which is supposed to help them and sort of gain the loyal consumer in the long term. But much of this is longer way. And of course, we're focused on the report that's aftermarket close today, which is what our first tweeter actually talks about, which is fairly positive, which says Chewy in a similar setup to how it was going into their last quarter, which we thought was very strong. Thinking of opening a starter position today going into the call. We still love them long-term, their long-term growth prospects, and the story here, interesting technical spot as well. So I am no technician, of course, but I do have to say that the stock has fallen about 26% from its all-time highs of $120 a share. But over the last quarter, since that last earnings report, like that tweeter mentioned, it has risen 30%. So well below all-time highs still, but seeing this positive momentum, which I think is pretty much a good thing for this company setting up into this report. But our next video today focuses on a comparison we often make. It's impossible not to, and that is Amazon versus Chewy, which says, I'm often asked if Amazon will buy Chewy. To me, Amazon likes to acquire companies it can use its cloud and logistics expertise, leverage with its 200 million Prime members to make them more profitable. How is Amazon going to make Chewy better? at a $40 billion price tag. I thought this was such a good point because, well, of course, Chewy would be a huge add to Amazon, no doubt. And it pains me to ever speak ill of Amazon. I actually think Chewy has done a better job in the pet space than Amazon. I think they have extremely excellent customer service, and whatever they're doing with their last mile delivery, it is the fastest delivery, no doubt, of anything I order. So they're doing something right there. So Landon, I am very curious to see what your data says, because I have a feeling it's not very positive, but I, of course, am a little biased. I'm positive on them long term.
Sure. Yeah. And you know what? I agree with you as far as Amazon goes. I think that Chewy's customer service is unbelievable. I mean, I've heard anecdotal stories. We've got data saying happiness is 80%. And I've heard stories from people in our office talking about how, they'll get handwritten notes from Chewy when something happens to their pet. It's wild how well they take care of their customers. And I think that they crush Amazon in that regard. So I think Amazon acquisition of Chewy would be bad for customers of Chewy, but it may bring in more revenue, but existing customers I think would be disappointed. However, you're right. The data is fairly bearish on them. Again, we're going into impossible comps. You talk about last year when a lot of people adopted a pet and then maybe they gave them back, or maybe this was just something where they're not going to stores and they're have to shop from home. And you can see in the purchase intent exactly when COVID lockdown started. Unbelievable spike in purchase intent mentions there. And it's kind of returned back to where it was, but it's actually falling a little bit. Very concerning, I think, for people signing up for Chewy. This is people signing up for Chewy, new customers coming in. So that's concerning. Again, impossible comps, but we also have data on their Autoship feature, which is basically people talking about using that and renewing and continuing to get that. And that accounts for about 70% of their sales. So this is a huge portion of Chewy here. Again, you can see when COVID started, you can actually see the renewal of when the anniversary of when the lockdowns were from that second little bump. But now we're getting to a point where we're down about 10% year over year. So it looks like Chewy was in the right place, right time. Of course, they took advantage and they actually executed extremely well given the influx of customers. However, I think that for a lot of reasons, the demand is actually waning a little bit and they're coming up against really, really tough comps. Just to give you a little perspective, we've got that earnings score. Last quarter, they were a negative 43 and they ended up at negative 43 LikeFolio score. The shares sold off 6% the next day. This quarter, we're looking at these quarantine stocks. Peloton was negative 74. It sold off 10%. Zoom was negative 74. It sold off 16%. This quarter, Chewy's coming in at negative 59. Where that puts the stock after, the day after earnings, I don't know, but I do know that LikeFolio data is definitely leaning to the bearish side.
Landon, here comes those two words that we've been talking about a lot during this earnings season, and that is decelerating growth. And this company's still growing, but it's also early. And the valuation that you look at in terms of a PE ratio is absurd. So no matter how good of a company this is, it looks like it's breaking down on the chart. You've got moving averages about to cross. You don't have great data out of LikeFolio data. So things as we know it are starting to pile up on this name. And, is whatever they're going to put up, is it enough, Landon? Because right now, like I said, growth, all these companies that had these great runs during the pandemic and now are starting to come down to earth, the price of the stock, and you mentioned a couple of them, very high profile names. Chewy's one of that too. Is this just another example of these companies getting haircuts because of that decelerating growth narrative?
Yeah, I think so. It's tough because you kind of have to get inside the mind of the investor, right? Inside of these institutional investors. And, they're very aware that Zoom and Peloton disappointed and they sold off and the growth is slowing or decelerating. And they have to know that that's likely coming for Chewy. So is that priced in? I mean, if they come out with stellar numbers, I think they could, go to the moon because it would be a complete surprise. But if/when they come out with slowing numbers, how much of that is already priced in, or are these institutional investors saying, yeah, but that was, that was at-home gym equipment, that was telecommunications, Zoom. This is pet food. This is different, and they're expecting different things. I don't know what those expectations are. I think the only way you can really read into expectations are by looking at the stock price, because that is money saying, I think it's going up and buying and pushing those bids up, or I think it's going down and selling and pushing the ask down. So, just looking at the stock price, I don't think that expectations have been lowered to a level where they would be surprised or disappointed with a decelerating growth. So in my opinion, I think there's still room to the downside. And that, LikeFolio data has been pretty hot lately, especially on these negative names, on these 1 year anniversary of the COVID lockdowns. And I think this is just another one coming in. I will say the company's very strong. They've got lots of customers. I think they've got 20 million active customers. They're getting nearly $400 per year out of each customer. So they're doing something really right with happiness at 80%. Love them. But there is a lot of competition, and there's a lot of reasons why people are either they don't have the pets that they had before because they took them back, which, as a pet owner, that's just unconscionable to me. But anyway, either that or they're going to the stores now. So, and buying them that way. So there's a lot of things working against them, not to mention tons and tons of competition. So I'm a little bit worried about this one. Long term, I love the name. It may buy on a dip, but I am expecting a dip.
So Landon, I completely agree with you and Kevin on this decelerating growth. It feels like right now in the markets with these earnings, all that matters is guidance. All that matters is how you can sustain these levels going forward. But I do have to challenge that this is one of these sort of pandemic stocks because it's sort of like a see a need, fill a need. Peloton was the need of gyms because we couldn't go to gyms, and Zoom was the need of working since we weren't going into offices. But I thought you made a really good point that, this is different because this is pet food, where I do have to say that in or out of the pandemic, we still need to buy food for our pets. So is it just that there's so much competition in this space that people are then returning to, say, a more traditional shopping method? Because to me, I never stopped or started, using Chewy just because of the pandemic.
Yeah, I think that's a good point. I will say that I think you have to remember that about 70% of their revenue comes from that Autoship. And that is because people want it delivered to them, which is extremely convenient. I know a lot of people that love it. I don't subscribe to Chewy. I've got a different one that I subscribe to a competitor, but it's the same kind of thing. But I think that the need for that has gone away because now you can go to the store and pick that up, and maybe that's something that you enjoy doing with your pet. And of course, again, a lot of people, took their pets back. I think that's a small percentage, but it breaks my heart. But anyway, I think you're right in that Peloton was hey, the gyms are closed, and Zoom was, hey, you can't go into the office. Pet food, you got to have it if you've got a pet, and Autoship and the delivery is very convenient. So I think there is a case to be made for expectations remaining high. However, the data says that likely they have that decelerating growth. So to me, that the case for higher expectations, which is, you made a great point there, Jenny, that combined with the likely decelerating growth sets up a nice bearish trade, in my opinion.
Landon, as we say goodbye here, I want to kind of pick your brain one last thing. So another thing I would add to this is it's sort of a proven business model. It seems like they took all the things Amazon did really well, quick delivery, availability of products, and really branding on the actual packages as sort of a way of marketing. I think Amazon was really the first to do that, and you really see Chewy taking that as well. But to me, it's always been a niche market. They're targeting more urban demographics. Maybe they can't lug the food on their back on foot when they go to the pet store. They'd rather order it and have it delivered. So, Landon, long term, you mentioned the 20-some million active customers. You mentioned the $400 or so dollars a year out of each one of them on average. Going forward, given it's sort of a niche play in terms of a certain demographic that it's shooting for in a certain marketplace, is the growth coming from building that 20 million or increasing that $400 number?
You know what? I think it's increasing the $400 number. I think they will increase the number of users. I think that's very important. But they've got the Chewy Health, which is where you can get over-the-counter medicines, and you can actually do online vet visits, so you can get prescriptions. So I think that they're shooting for that. They actually gained about 9% year over year on that $400 per customer. So they're definitely going for that to be increased. And there's so many people. I mean, if you think about 20 million, that's a small percentage of the number of people who own pets. So I think they can go both, but I know for sure that they've got their eyes on increasing the dollars per customer. And I think they can do that with probably a higher quality product. You know, I subscribe to one called the Farmer's Dog, which is about 50% more, and it's actually human grade quality food, and dog eats it up like crazy, loves it. So I think that Chewy could go that route. They could get more dollars. The margins are extremely high on all of this, almost like 28%, I believe. So Chewy's set up for success. It's just whether they grow the customer base and or they grow the dollars per customer. But right now, I think, again, expectations too high.
I might have to check out this Farmer's Dog and see if that's something my Oscar might be interested in. But Landon, we got to leave it there. Great conversation as always. I'm really looking forward to this report and seeing what the expectations really are in the reaction to whatever the information is. Thanks to Landon Swan, co-founder of LikeFolio.com, and to Jenny Horn, TD Ameritrade Network contributor, for joining us here on this hashtag segment.